Welcome back to Investing Talk Podcast. Today, we're going to be looking at Neogen.
Neogen.
Based on some information that you sent over.
Right.
You're curious about what's been happening with the company.
Yeah.
And what some of the key things to watch are.
Fair.
We've gathered some analysis on, recent price movements.
Yeah.
Financial performance and industry news.
Okay.
To unpack it for you.
Got it.
Our mission here is to cut through the noise and highlight the important nuggets.
Okay. Sounds good.
So we have some info covering their recent stock trends.
Yeah.
Their second quarter 2025 financial results. And the impact of their past merger with 3M's food safety business.
Right.
We'll also touch on some technical indicators and what they might suggest.
Oh, okay, great. So looking at their recent stock trends.
Okay.
Second quarter 2025 financials.
Yeah.
The merger and also some technical indicators.
Okay, perfect. Let's start with their recent performance.
Okay.
Neogen announced its second quarter 2025 revenues.
Reached $231.3 million.
Okay.
A 0.7% increase compared to the same period last year.
Right.
This modest growth
Uh-huh.
could be seen as a sign of stability.
It could.
What are your thoughts on this?
Yeah, so I think that 0.7%, while seemingly modest,
Yeah.
really needs to be considered within the context of this merger
Right.
with 3M's food safety
Right. 3M.
division.
Yeah.
Periods of major business combinations like this can see temporary, moderation and growth
Right.
as the focus shifts to, streamlining
Yeah.
operations and capturing synergies.
Makes sense.
So the real thing you want to watch here
Yeah.
is whether this growth rate
Okay.
begins to accelerate
I see.
in the coming quarters
Okay.
as a sign that the integration process is taking hold.
Okay. So it's more about like the long-term trend rather than just like this
It is.
one data point.
Exactly.
Okay.
Yeah.
That makes a lot of sense.
So this leads us to their broader financial health.
Okay.
As of a prior report, Neogen had revenues of $527.16 million,
$527.16 million.
an operating income of $58.62 million,
Okay.
and a net income of $48.31 million.
Got it.
They also have a quick ratio of 2.01
Uh-huh.
and a return on assets of 1.96%.
Okay.
For someone trying to gauge the financial stability here,
Yeah.
what do these numbers tell us?
So these figures, I think, offer a really valuable snapshot
Uh,
of Neogen's financial standing.
okay.
That quick ratio above 1,
Yeah.
like they're 2.01,
2.01, right?
generally indicates a robust ability to meet short-term liabilities
Okay.
without needing to liquidate inventory,
Right.
which can be a less liquid asset.
Yeah, less liquid.
Furthermore, a return on assets
All right.
of nearly 2%
Okay.
suggests they're effectively generating profit
Oh.
from the assets they hold.
So they're using their money well.
Yeah, they're doing well.
Okay.
When we connect that strong financial foundation
Yeah.
with the recent revenue growth, it really paints a picture of a company
Okay.
that's managing its resources effectively, even if it isn't currently experiencing rapid top-line expansion.
I see. So, they're in a good spot
Yeah.
to be able to grow.
Yeah, I think so.
They're not in trouble.
No, not at all.
Okay, that's good to hear.
Uh-huh.
So now let's delve into this event that we mentioned earlier.
Right.
Neogen's merger with 3M's food safety business
Okay.
back in September 2022,
September 2022.
valued at around $5.3 billion.
This
Was a major move
yeah, huge.
that really expanded Neogen's footprint in the food safety market.
It did.
What were the key strategic reasons behind a deal of this magnitude?
Well, I think
Yeah.
the acquisition of 3M's food safety unit was a transformative step for Neogen.
Yeah.
It really broadened, their
Right.
product offerings and their reach within the food safety sector.
I see.
Strategic consolidations like this are often driven
Yeah.
by the desire to achieve greater scale,
Okay.
realize cost efficiencies through synergies,
Okay.
and gain access to new technologies
I accept that.
and customer bases.
They wanted to get bigger, basically.
Yeah, they wanted to get bigger. They wanted to, consolidate
Okay.
and really become a bigger player in the market.
Okay.
For you as someone following Neogen,
Yeah.
the key consideration is how effectively they can integrate.
Okay.
These combined operations,
Yeah.
successful integration should lead to, enhanced efficiencies and potentially accelerate revenue growth.
Okay. So again, it's like that long-term view.
Yes, it's the long game.
Okay, not just
Right.
1 quarter.
It's not about the short term.
Right.
It's about the long.
All right. Makes sense.
Yeah.
So now let's switch gears.
Okay.
And talk about what the stock's been doing.
All right.
Recent technical analysis points to a mixed price trend.
Okay.
Key indicators that are often watched are the 50-day,
50-day,
and 200-day moving average.
200-day moving average, right?
For those who might be less familiar, what's the significance of these averages?
So think of moving averages as providing a smooth perspective on a stock's price trend over different periods.
Right.
The 200-day moving average is often seen as representing the long-term consensus view on the stock price. When the shorter-term 50-day moving average crosses above the 200-day moving average, it can suggest a potential shift in that long-term trend towards a more positive outlook.
So there's a
bullish signal. Conversely, a cross below can signal a weakening trend.
Or a bearish signal.
Right, bearish.
Got it.
Exactly.
And another indicator we came across
Right.
is the Relative Strength Index.
RSI.
Or RSI.
RSI.
An RSI above 70 is sometimes seen as an indication that a stock might be overbought.
Overbought.
And could be due for a price correction.
Right.
While an RSI below 30 might suggest that it's oversold.
Oversold, yeah.
And could present a buying opportunity.
Right.
The analysis we looked at suggested a buy if the RSI dips below 30.
Below 30.
And the stock then breaks above its 50-day MA.
Okay.
A sell if the RSI goes above 70.
Above 70.
And it falls below the 50-day MA.
Right.
And a hold if it's trading between those moving averages.
Okay.
With a stable RSI.
Yeah. So how should someone interpret these kinds of signals?
Yeah. What does that actually mean?
So the RSI is a momentum indicator that helps gauge whether a stock has moved too rapidly in either direction.
Got it.
Combining the RSI with moving average analysis can offer more robust insights.
I see.
For instance, an oversold RSI reading below 30.
Yeah.
Coupled with the stock price then breaking above its 50-day moving average, could suggest that downward pressure is diminishing and a potential upward reversal is gaining traction.
Got it.
So it's about looking for confirmation from multiple technical signals.
So not just the RSI.
Right, not just one.
But like using it in conjunction with other indicators.
Exactly. It's a multifaceted view.
Multifaceted. Okay, I like that.
Yeah.
It's important to remember, though, that these technical indicators are just one piece of the puzzle.
One piece.
Factors like the company's underlying financial health.
Right.
That 0.7% revenue increase we discussed.
Right.
And the overall state of the market.
The market, yeah.
Are also crucial drivers of stock movement.
Of course.
We also saw that Neogen participated in investor conferences.
Yes, they did.
Like the Piper Sandler Healthcare Conference. How can these events influence investor sentiment?
So these investor conferences provide a platform for companies like Neogen
to communicate their strategy, discuss recent performance, and outline future prospects directly to investors and analysts. Positive presentations or updates at these conferences can really boost confidence and potentially lead to increased demand for the stock.
I see.
Conversely, you know, any concerns raised or lack of clarity could have the opposite effect. So it's a really key avenue for the company.
So it's a chance for them to really get their message out there.
Get the message out. And shape market perception.
Shape the market perception.
Yeah.
Okay. We're also seeing a trend of consolidation in the industry.
Yes.
Highlighted by, Neogen's merger with 3M.
Yeah.
This suggests that we might see more strategic moves.
More to go.
Within the food safety sector.
I think so.
Additionally, Neogen's focus on areas like genomics and advanced detection technologies seems like it could position them well, right?
For future growth in both food and animal safety.
It seems like they're trying to be at the forefront of where the industry is heading.
It seems like they're being very proactive.
Yeah, definitely. So that's a really critical point. The food safety landscape is, constantly evolving.
Always changing.
Always changing, right? And strategic consolidation allows these companies to achieve greater efficiencies and expand their reach. Furthermore, Neogen's investment and focus on these cutting-edge technologies like genomics and advanced detection methods indicates a forward-thinking approach and positions them to capitalize on future trends and potential disruptions within both food and animal safety.
So they're not resting on their laurels.
No, they are not.
Okay, good.
They're looking ahead.
Finally, looking at valuation metrics like a normalized price-to-earnings ratio of 23.04 might suggest that Neogen is relatively pricey.
It might.
Compared to some of its peers.
To its peers, yeah.
However, their solid financial standing and significant position in the market could justify this higher valuation for certain investors.
It could.
Ultimately, it comes down to an individual's assessment of their growth potential and competitive advantages.
Competitive advantages. Yes, it really does. Evaluation is always a relative exercise. A seemingly higher PE ratio can be justifiable if investors have strong conviction in the company's future growth prospects.
So they really believe in the story.
Yeah, they believe in it. Their market leadership or ability to generate strong and consistent earnings. Neogen's established presence in this essential food safety market, combined with the potential benefits from this integration of the 3M business, could support a premium valuation in the eyes of many investors.
So taking a step back then, looking at everything we've talked about, it seems like Neogen has a pretty stable base.
They do.
In the food safety market.
Yes.
They've obviously been bolstered by this merger.
By the merger.
And while recent revenue growth has been a bit measured.
Yeah, it's been modest.
Their expanded capabilities and healthy financial metrics provide a good foundation for potential future expansion.
It does.
And, of course, it's important to keep an eye on those technical indicators like moving averages and the RSI.
They can provide insights.
To give us some shorter-term insight.
Yeah.
But it's crucial to consider that broader picture.
The bigger picture.
Of the financial health and industry trends.
Absolutely.
Anything else that you think that listeners should?
Well, I think this brings up an interesting question. For you to consider as you continue to follow Neogen. How might the ongoing process of integrating this 3M food safety business ultimately impact their revenue growth and share of the market in the quarters ahead?
So how is that merger really going to play out in the long term?
Exactly.
Okay, so something to definitely keep an eye on.
Definitely something to watch.
Great. Well, we trust that this analysis has provided you with a clearer understanding of Neogen.
Hopefully.
If you found this helpful, please subscribe, like, and leave a comment.
We appreciate it.
We always value your feedback.
Yes, we do.
And look forward to our next discussion together.
Sounds good.
Thanks for joining us.
Thank you.